on the drivers in particular of the good gains today?
Well, the market's certainly watching what's happening over in the US, and the fact that overnight that both the Senate parties indicated that they would be looking at coming to a deal at the end of this week saw the US stock market higher. So given those leads, we did see a good day on the Australian share market. However, the markets have really been ignoring what's happening in the US. Essentially, since the US shutdown began on the 1st of October, we've seen both the Australian market as well as the US stock market up around about 1%. So the market's certainly not pricing in a debt default by the US stock market. And in fact, if we have a look at the price action, it does imply that once we do get over this debt ceiling hurdle, that there will be more money coming into the market. So it should make for a very interesting Christmas season, and hopefully a very strong Santa rally this year. But all up, the market's looking very strong, up 1% and closing at about 42.60 points. 52.60.
What led the gains today? Where did we see the most strength?
It was all about growth. So as you'd expect, when we do see the market trending quite strongly, it's about the energy, the materials and the industrial sectors. In fact, the material sector is probably a standout, especially the iron ore miners. We saw Rio Tinto's third quarter numbers, but outside of that, the iron ore miners have been doing extremely well. And that's probably a combination of two factors. One, we've seen record iron ore export numbers, and iron ore prices still about $20 to $30 above where most investment houses had predicted iron ore price to be in the third quarter of the year, which is seasonally the weakest. So iron ore price is still around $133.60 US a ton, and that's been great news for those iron ore stocks. We probably saw iron ore prices bottoming out in June, and since June we've seen stocks like Fortescue up by 48%, Atlas up by 22%, and Rio Tinto up by 12%. We're seeing a supply deficit in terms of the eastern states of Australia in terms of gas, and some very big projects coming online in the near term, and they include the Gladstone LNG project as well as Papua New Guinea LNG project. So the beneficiaries of that increase in production will be companies like Santos and Oil Search. Woodside Petroleum, I guess we're just holding on this one for the time being, and that's really because of its Israeli assets and the uncertainty over them at the moment, but a world-class portfolio of assets, but probably moving to a more mature company, so less growth, more dividends from this type of company compared to an Oil Search and Santos, which do have production coming online in the next half year and the next 12 months.
Any further falls in Cochlear would you see as a potential opportunity?
The problem is that when you are buying stocks which are falling, that you don't know exactly what price level it's going to fall to. So Cochlear is still a quality company, and when we do see some of its R&D coming to fruition and its new products coming online, I think we will see quite a good take-up. But if we have a look at Cochlear's share price, this is its share price over the last 5 years. This is what it looks like. And you can see that just in 2013, this is a story of a stock that's been falling in share price quite significantly. So really you want to see a reversal of that trend that we have been seeing in 2013, and signs of life in terms of earnings growth. Cochlear today coming out to say that it expects flat earnings the current financial year, so unfortunately that's been a negative for the stock.
Markets certainly seem to approve. We saw Rio close up about 2.5%.
We saw a record set of numbers coming out for the third quarter, and it's always the iron ore that we go to first because it makes up so much of Rio Tinto's business. And if we have a look at third quarter production, up by 2%, it came in at 68.3. Shipments came in at 68 tons, which means everything they were pulling out of the ground, they were also shipping, and that implies a run rate of 273 million tons per annum, and that's a record. Now, Rio Tinto saying that by the first half of 2014 they should hit a run rate of 290 million tonnes per annum, and that in 2013, the current calendar year, they expect to see production of 265 million tonnes. We also saw upgrades for forecasts in terms of production for both refined copper as well as thermal coal. Thermal coal production in particular very strong. And if we have a look at Rio Tinto's share price, this is the intraday graph of Rio Tinto, and you can see that once that production report came out, we did see the shares from having a very good day with a rise of 1.8% to jumping to a rise of 2.5% for the session.